Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, September 10th, 2023. Hope you guys are having a fantastic weekend, and let's get started. So I'm showing you just this is JH Investments. They're just going over really the market moving headlines, and the reason why I'm showing it is because when we had that big rally from May into August, that was really kind of unprecedented. I've never really seen anything like that. And really, the main reason why we had that rally was the talking heads were really banking on the Fed stopping raising rates, and they were going to start lowering rates, and that the recession was behind us. And this is what they put in their newsletter is the reason why we started the concerns for the rally was crude oil is awakening. Now, remember, that's one of the things I've been saying to members for the past couple months that everybody's thinking that the Fed is going to start lowering rates and things are going to be roses and rainbows. But I said oil is about to make an important low. And from there, the way it's going tracking right now, I don't have any time period with this, but there's a pathway to see oil trading above $150 a gallon a barrel. And if that happens, we're going to have, gas prices back closer to $6 a gallon. That's inflationary. That's going to hurt the overall general public. So that the Fed isn't going to start lowering rates, if inflation is ticking back up. And if we scroll down to their other reasons, you can see here, you have the 2-year rise in yields, which again, I've been saying that the yields are heading up. Now we're back into the recession chatter again. Again, that's something I've been saying where we're not out of the recession because primarily, what people are gauging this on is the employment numbers. But unfortunately, these employment numbers that come out that everybody's cheering for are seasonally adjusted, and they could be made whatever they want. And then by year's end, they have to start lowering the actual numbers were, and that's really what we've been seeing lately. Is these job numbers that came out that blew out with 400,000, 500,000 new jobs are getting revised back down to 150,000. So the reason for the run and the recession chatter and all that is just made up. And there's a lot of things that are going, that are in the ballpark right now that aren't going to really be helping out this market. And as I said, September and October are fairly weak months for the market. So let's go over what we did on Friday. So I said for today, watch the 44.62 on the S&P, 44.71. That's where the bears may come in and try to stomp the bulls down. The bulls used much of their short-term fuel trying to save the mini crash yesterday. So now let's take a look at the charts. And you can see here we had the gap up. We made it up to 44.72. So if you layered in 44.61, 44.72, you're layered in right around that 44.67. And from there, we saw the sellers step in. And if it wasn't for this last 15 minutes, we had the S&P that was plus 25, and then it was -4 down here. So this little trade setup right here, if you took it, it was a pretty nice trade. If you trade the spiders, it's a $2.50 point move on it, and if you're doing options, you're making a real lot of money. And with the SDS, it was almost a 1% move. So this is what's going on, and what I was saying where the pivots were. We knew that there was going to be support right here and that the demand was going to bring it back up to the 44.72. And I'm still leaving the door open for these two pivots to get touched. And really the main reason is because of this open gap that's at we're looking at this right around the 44.95. So I'm leaving the door open even though they may not need to get touched. And if they do, this is really the way the pattern's going to go. It's going to be an A, B, C, A, B. Well, this would be your wave B, and then the wave C up there. So it's not really changing the overall dynamics of the market. But really, what I would rather see is we come down to here and touch this right around that 4,400 level. And then this is going to be, and then we make the bounce up. Now you could say that this is the right shoulder. I don't really like it because here's the neckline on it. So I'm still looking for, either we come down to here and bounce up and then down, or if we just came down, maybe this pattern's not, or if we head up, it's still just it's going to make a higher, I would say, right shoulder, but the pattern hasn't ended. So we don't have any divergences here on this low. So that is telling us that this most likely is not going to be the low, even though we moved away from it. But right around that, if we get to the 44.30, if we break below it, we're going to see a pretty quick move down to this support line, which is right around that 4400. From there, a bounce back up to this resistance, and that would be right around that 44.72, and then that would form the right shoulder, and then we head down. Now, there is no guarantee that this pattern's going to play out. I've been watching it since, from when we made this run here. It is forming pretty well, but we still have to see on it. So I'm not married that we have to go up or down. We could just go straight down from here and the pattern doesn't play. But this is the important pivot for the Bears. They need to get through to 44.30, and then from there, depending on when we get to this trend line, they're going to have to get through this, because from there, that's when we start seeing panic selling down to the 44 43.55, and then the 43.35, and this is where we exited half our short position and started building it back up near the 44.40, and I'm still holding on to the last quarter to fill that. So we don't, right now you can see we're a little bit oversold neutral. We don't have any bullish or bearish divergences, and that's really why I'm kind of on the fence. And okay, if we head higher or lower, and we just kind of form the pattern from there. But right now you can see we ran right into this resistance. This is where I was looking, and from there the bear stepped in. So I do believe that that we are going to be pushing lower. It's just a matter of, do we need to make a move up and then down, or do we just come down and then bounce and then down again? So that's really the pattern on the 60-minute chart. 15-minute, you can see that we're a little bit oversold because of this move right here. We have the important pivot at the 44.73, but you can see we have the moving average right here at the 44.68. So this is going to be really, say, the important first pivot, 44.68, about 11 points higher than where we are. We do have this resistance right here, but that's right above it. It's only 2 points, so it's not really that good of a resistance. We're either going to pop up and get up to the 44.68, or if the bears can get through this 44.48, which was the lows on Friday, then we're coming down and we're going to be testing this 44.30. So those are the short-term pivots on it. If we just take a look at what's going on with the daily chart, you can see the bills tried to hold the 50-day moving average. This is where I believe the magnet is going to be. It's going to be coming down to the 200-day moving average. That's 42.46. And we have a real good chance of coming down to the 4200, or even down to the 4100. So these are my downside targets. We have to just be a little patient. This right here is a hammer, inverted hammer. So this is not a bullish pattern. This means that sellers were waiting, and if the bears can push it through this low right here, we should see some panic selling. So those are really what's going on right now. I would stay open-minded on it. And I just want to go over one other quick thing. I'm going to be sending out an email. It might be tomorrow or later on today, but what this is really what's going on with the morning notes that I put out. But the new thing that I'm going to be putting out is going to be, hang on one second. So it's going to be this new program that I'm starting, and I'm calling it the Inner Circle Mentoring Program, and it's going to be live. And I'm only going to be offering this out to 10 people, because it's a fairly new program. It's not going to start until probably midweek, Wednesday, maybe Thursday. But what I'm going to be doing is, I'm going to be doing, after you get the morning notes, I'm going to be doing a Zoom call. So it's going to be a live call. You can ask me, whatever questions you want. It could be about a particular stock, or if you're looking to trade an option, what would I use for the option trade, and stuff like that. So it's going to be basically an open forum. But when you join the Inner Circle Mentoring Program, you're going to get you're going to get our normal premium stuff. So the morning notes, that's what I just showed you, the nightly video reports, the premium reports. But then we're going to be jumping on a live Zoom call, whoever's participating in this, just to go over the short-term setups. And that's like what I was just showing you, where I'd be looking to short the S&P when it gets between the 41.61, 41.71, and then I would be sending out. It'd be more of a hands-on, say, service that I'm doing, and you can ask me questions about ETFs, SDS, SSO. Those are the ETFs that we trade. What are the best option lines to use for that day for the projected move? You can ask me about any stock that you want me to take a look at, and then I'm going to also be trying to training you on how I view things, what I use, what indicators I use. So I'm going to be, hoping to be able to, to teach you on, what to do as far as trading, so you can do this more on your own. Setting up stop losses, learn how to trade on your own. Then we have. I'm also going to be doing a one-on-one. It's going to be a 15-minute to 30-minute Zoom call. It's going to be once a month for each member, and it's basically just an open forum with me. You can ask me what you want about stocks, about oil, gold, in particular, stocks within gold. So it's really, it's going to be up to you. But this is what I'm putting together right now. And if you are interested in this, please send me an email. It's Gary at sentimenttiming.com. You can see that in the email that I just sent you with this. But it's only going to be for ten members, because I want, this is really something that I want to feel out. I'm not 100% sure if I want to expand it bigger or make it smaller. So this is only for the first 10. So if you're interested, just send me an email, say, yes, I'm interested in learning more. I may set up a Zoom call with you to go over, where you are in trading, what size account do you have, what are you looking for? And if it's a fit, then, then we'll go into what we're looking to, for you to join this, and we'll go from there. But in any case, it's going to be something that's pretty cool. It's been a lot of people have been asking for it. I've been working with a member, Chris, and we've just been going really back and forth on email. And I was telling him, exactly where to look to short if it gets through this. So um, those are really, that's what's going to be part of this. It's going to be more of a hands-on type service where you can ask me anything you want, and I'll show you, and I'll try to teach you along the way. So again, if you're interested, send me an email and I will get right back to you. And then I just want to get a feel for, what's the interest on this and something like that. So with that, again, tomorrow, really the pivots that you want to watch, it's fairly simple. The bulls need to get above the 44.73. If they do that, we're going to have a pop up to the 44.90, possibly 44.95. If the bears can get through this 44.50, then we're coming down and going to be testing the important 44.30. If they lose that, that's where I believe we're coming down to the 4400. So with that, have a great rest of your weekend, and I'll talk to you guys in the morning.